Welcome to Taxation Law Principles. Tax is something that does affect all of us. There are different kinds of taxes: duties, levies, tariffs, and charges. The most common one is our income tax that we pay to the Commonwealth Government. A definition of tax is compulsory contribution to the support of government, levied on persons, property, income, commodities, transactions, etc. So this includes your personal income tax, but will also figure when you're buying or selling a property and there is a levy paid as stamp duty. Taxpayers are compelled by law to pay taxes and are obliged to do so even though they may not necessarily receive any direct benefit in return. There are three types of taxes: proportional, which is imposed at the same rate on all taxpayers. This is exemplified with the GST, the Goods and Services Tax. Progressive taxes are imposed at rates that increased with the amount of tax base, in other words, your income tax. And as you get to a certain threshold, the rate will actually go up. And there are regressive taxes as well that are imposed on, usually on commodities, and they will decrease from a tax base. Tax has been around for a very long while. The purpose is to give money to the government to allocate to different needs in the community. There are records of taxation going back as far as the ancient Sumerians, the Egyptians, and the Greeks. Income tax was introduced in England by William Pitt in 1799 to fund wars against Napoleon. The United States introduced an income tax in 1862 to pay for the American Civil War. The Commonwealth of Australia introduced income tax in 1915 to fund the World War I effort. In France, they introduced a value-added tax in 1954, and this is the same kind of tax that is our GST that was introduced in 2000. The jurisdiction for taxation falls generally within your geographical area. So the territorial approach based on source, and then there is a worldwide approach based on the source and residence. Australia adopted the worldwide approach. Double taxation agreements are actually in place with some countries so that the person who is perhaps a non-resident of Australia won't be taxed twice. The sovereign right to tax means that each nation has the ability to design its own tax system. The Australian Parliament enacts tax laws for Australia. The ATO is headed by a Commissioner of Taxation and administers and enforces the tax law. So the ATO is the one that will take a taxpayer to court if they fail to pay. Unpaid Commonwealth taxes become debts owing to the Commissioner of Taxation. The Commonwealth tax disputes with the Commissioner are heard by, firstly, the Administrative Appeals Tribunal, then the Federal Court if there is an appeal, full Federal Court if there is any further appeal, and a taxpayer will only be permitted to go to the High Court if there is leave granted because it's a matter concerning the nation's welfare, and based on the Constitution, taxation law would fall into that category. So the functions, as I mentioned, are for the government to determine. Raising this revenue allows the resources, I should say, to be redirected from citizens to the government and provide the government with revenue for use in its spending programs. Social and political functions of taxation used to promote government objectives. There are also tax incentives, carrots to encourage certain behaviour, and tax burdens, a stick to discourage certain behaviours. Economic functions of tax. It modifies consumer behaviour. Higher taxation leads to less spending and deflationary effect. Lower taxation leads to more spending and inflationary effect. An example would be the taxes that are imposed on cigarettes in this country. redistribution function as well. Wealth from the very wealthy, we get more resources directed at lower earning people. Tax expenditure, usually indirect government spending programs. Examples of these: superannuation program, venture capital program, research and development program, and film production program. And these are set out in the tax expenditure statements the government issues. There are two main forms of tax: direct and indirect. Direct is the economic burden being borne by the person who pays the tax because of their income. Indirect tax, the person who pays the tax is able to pass on the economic burden of tax to a third party. An example of this is the GST. Ways that tax are calculated, as I mentioned: proportionate, progressive or regressive. Proportionate, imposed at the same rate. Imposed, if it's progressive, it will increase, and if it's regressive, it will decrease. Australian tax individuals rather than families, and there's no general account taken of a taxpayer's dependents for tax purposes. Nevertheless, some limited tax concessions apply to individuals with families. For example, there is an offset, so it is a reduction of the calculated tax payable at the end of the calculations. Medicare levy and phase-in rules are also examples. Transfer system provides main support for families through direct government payments. The formula is: income tax is worked out by taking your taxable income, multiplying it by the appropriate rate, and taking off any of those tax offsets. So the taxable income used in that calculation is your assessable income less deductions.